We have completed an audit of the Sheridan AV Ltd. We reviewed information for the period March 31, 2020 to March 31, 2021. We conducted this performance audit in accordance with generally accepted auditing standards and the international standards for the professional practice of internal auditing. Those standards require that we plan and perform the audit to obtain sufficient, appropriate evidence to provide a reasonable basis for our findings and conclusions based on our audit objectives. Before the auditing activity was conducted, we provided a letter of approval containing the reasons to audit the Sheridan AV Ltd. The importance of the reason to audit is to know that internal auditing is an essential function of any information, security, and compliance program that is a valuable tool for effectively and appropriately managing risk. These important questions are to be addressed through internal auditing. Are we ensuring we are doing what we say we're doing? Are there gaps in our policies and procedures that need to be solved? Are there any areas for improvement? Are we meeting our compliance goals? We provided a letter of approval containing the reasons to audit the Sheridan AV Ltd. That includes what are the legal requirements for audit of a private limited company? What are the legal requirements for audit of a PLC listed on the stock exchange? The statutory duties of the auditor, duties of the director for reporting the financial results of the business, and what are the advantages of having an audit. Audit engagement letter is sent out when the audit process begins in order to avoid misunderstandings relating to the audit process. The engagement letter is created to document and confirm the appointment of the auditor with the subsequent acceptance of the auditor. Engagement letter was also sent containing the objective of the audit of financial statements, what are the management's responsibility, the scope of the audit, the form of any report or other communication of results of the engagement, the test nature and other inherent limitations of an audit, and the unrestricted access to whatever records, documentations, and other information requested in connection with the audit. After sending a letter of engagement, we will begin with the planning. During the planning phase, draft notes about the business and general economic conditions were listed. Information were obtained from interviews with the managing director and other staff and minutes of directors' meetings. As of March 31st, the Sheridan AV Ltd. Recorded a double turnover compared to last year. This is because of the aggressive marketing and advertising campaign. Moreover, they have increased number of companies that purchases their products, and they have increased their volume of trade. However, there were always technical errors on management account based on the 2 consecutive meetings that were documented in the minutes. Their revenue was only verbally confirmed due to some technical errors. According to the interview of Mr. James, the account system they are using is old-fashioned and they are just only using Excel and Microsoft Office suite to manage their accounts. In addition to this, only one person knows how to understand how those accounts being managed. In this point of view, this is in a high risk of fraud and can cause a materiality because of some errors and misstatements.
The next task is to complete the potential risk and control environment forms. But before that, let us answer the question of what is the internal control environment of a company. The Institute of Internal Auditors Control Environment definition states that the control environment is the foundation on which an effective system of internal control is built and operated in an organization that strives to achieve its strategic objectives, provide reliable financial reporting to internal and external stakeholders, operate its business efficiently and effectively, comply with all applicable laws and regulations, and safeguard its assets. A control environment is made up of a compilation of an entity's organizational structure, processes, policies, and standards that are utilized to maintain control across the organization. The board of directors and executive management of a business establish the company culture and attitude regarding the importance of maintaining controls and set the expectations of standards of conduct within the organization, often referred to as the tone at the top. Why is it important to have strong internal control? A failure to have internal controls in place results in front-page news stories that no company wants to be part of. Enron, WorldCom, and Equifax are a few examples of organizations that made news headlines due to a lack of internal control. Similarly, there are dozens of cases each year of companies who privately lost millions of dollars due to control failures, fraud, and misconduct. All of these outcomes are the result of a weak internal control system and highlight the importance of internal control to the success of an organization. Having a strong internal control environment can provide management and stakeholders reasonable assurance that the organization is operating in accordance with company policies, industry standards, and regulatory requirements. Now, let's see the potential risk and control environment form. For the integrity and ethical values, the employees of Shared and Audiovisual seem to do their work on their own. The company lacks an environment where workers are able to mingle and do work as a team. Apart from that, some are not even fully aware on their job description and keeps on passing responsibilities to their colleagues. It is recommended that the company should have a proper training program and a team-building activity that allows employees to build trust and connect with their coworkers. As for the board of directors and audit committee, the board doesn't have any regular schedule for a meeting, and not all members of the board were present. Some members doesn't also have sufficient knowledge, experience, and time to serve effectively. It is suggested to have a fixed meeting schedule to ensure and monitor the business performance, and having an audit committee composed of outside director is also commendable. Next is the management's philosophy and operating style. The management keeps wanting to adjust misstatements, but months have passed. Still, no progress has been observed. The business risks also are not carefully monitored. It is suggested that there should be an audit committee or internal auditor to assess and monitor business risk. For the human resource policies and practices, there is a poor segregation of duties, and workers show ignorance with their job, as Grave Moore conducted the interview. It is recommended to change the hiring process and ensure competency of the applicant rather the connections that he or she have. For the second part of the control environment is the organizational controls. As for the summary of the organizational controls, Shared and Audiovisual should have a specialist IT staff to design and program. Guidelines and control for personal authorization should be executed to avoid future issues regarding confidentiality. In conclusion, organizations that establish effective control environments can improve their efficiency in delivering value and achieving its strategic objectives. The important role of internal control plays within the control environment and how to design, implement, and assess internal control framework. Potential risk. Business risk is a broad category. It applies to any event or circumstance that has the potential to prevent you from achieving your business goals or objectives. Business risk can be internal, such as your strategy, or external, such as the global economy. The potential risks that are included in the form are risk factors relating to industry conditions, operating characteristics and financial stability, management, susceptibility of assets to misappropriation, And lastly is controls. These factors present risk, of course. And some of the actions recommended on how to address the risk are the following. The auditor must ensure if the accounting statutory suits the business well and in accordance with the standards. Encouraging and listening to employees who speak when they notice or suspect something's wrong to attain an honest environment in the workplace. Regular assessment of risk and monitor the business operation. Incentives should be given wisely to employees directly related to a certain and realistic goal to prevent pressure. Management will be advised to improve their staffing to have a reliable and competent employees. And many more. You can access the file on the link listed in the description box below.
In reviewing draft accounts, preliminary analytical review is performed. What is preliminary analytical review and how is it important in auditing? Preliminary analytical review has been defined by Boaquina CPA as both analytical procedures and management inquiry procedures applied during the planning stage of the audit. It is performed to obtain an understanding of the business and its environment to help assess the risk of material misstatement in order to determine timing and extent of audit procedures. In the preliminary analytical review of the income statement of Sheridan Audiovisual Limited shows that even the entity's revenue in March 31, 2021 goes down by 563,476 from December 31, 2020, the entity has lower cost of sales during the year 2021 that generates a higher gross profit than last year. Even though the distribution cost, administrative expenses, and finance cost has higher estimate this year, it still yields higher income than last year. In the preliminary analytical review of Statement of Financial Position, it shows in the tangible assets that the entity acquired more property, furniture and fixtures, and computer equipment last year. In the inventories, there are more raw materials and finished goods last year compared this year. In the trade receivables, there are receivables from other debtors and prepayments this year, while the cash increased in conjunction with increase in turnover. As to the equity, there are more accumulated profits last year. The entity acquired more mortgage last year. As to the current liabilities, there are more bank loans, trade payables, proposed dividend, and accruals this year.
So for now, it's all about determining the materiality level. The primary purpose for setting overall materiality when planning the audit is that it is used to identify performance materiality which is needed to help auditors design their audit procedures and a clearly trivial threshold for accumulating misstatements. Depending on the audit risk, auditors will select different values inside these ranges: 5% to 10% of total revenue, 1% to 2% of total assets, 1% to 2% of gross profit, 2% to 5% of shareholders' equity, and 5% to 10% of net income. To detect the misstatements that could be material to the financial statements taken as a whole, the auditor selects 5% of revenue, 1% of total assets, 1% of gross profit, 2% of shareholders' equity, and 5% of net income to be the material level. So as you can see, in the first column is the statement base, in the second column is the amount, and in the third column is the materiality level. So first is the revenue, and the amount is 4,846,699, and the materiality level is 242,334.95. In the total assets, the amount is 2,575,979, and the materiality level is 25,759.79. In gross profit, the amount is 1,250,448, and the materiality level is 12,504.48. In shareholders' equity, the amount is 1,118,561 and the materiality level is 22,371.22. And the profit before tax is 210,394 and the materiality level is 10,519.70. Therefore, the amount less than the materiality level will be considered as immaterial.
Describe the risk assessment in the Sheridan Audiovisual Company. Sheridan doubled turnover this year. Emily Winters, as sales director, has an excellent performance and a useful addition for them. The staffs are still the same and delivery of new computer system is done. But according to Rosie, documentation of every move in the planning is not well done. With regards to the accounting managers, some of the employees are not aware of the movement and activities that is going on in the entity, even though they're a small company. Based on the aforementioned, the inherent residual risk is high. Even though the company is performing well and expecting a high return of investment, if the planning phase is implemented without proper documentation, the possibility of not seeing the areas of improvement is high. The company may perform well, but won't stay in the top of the competition. It is also observed that when it comes to accounting information, employees are not aware of what's going on inside the entity, and fraud and error has the highest possibility of occurrence. Therefore, the risk in this audit activity is high. The auditors need to perform substantial procedures that may help in detecting the fraud and error and help giving the entity an accurate advice. Although the sales performance is good, they need to properly implement the plan and document it for improvement and in order for the company to be competitive.
During the interim visit 1, there are internal control questionnaires that were answered to identify the weaknesses in the current sales system and relate them to what could go wrong in the accounts. Typical errors or irregularities were included in the documentations are sales amount recorded incorrectly, goods shipped but not billed to customers, goods billed to customers but not shipped, sales recorded in wrong accounting period, goods sold to customers who were bad credit risks, sales occurred that were not authorized, sales posted to wrong accounts, and authorized write-offs of receivables may have occurred. Upon the provided documentation of Mr. Moore, the following answers were provided.
Do all goods dispatched result in a customer being invoiced? First, are orders recorded on a pre-numbered sales order? Yes. Are pre-numbered goods dispatch notes raised for all goods taken from the stores? Yes. Can a goods dispatch note or GDN only be raised on the basis of an approved sales order? Yes. Are GDNs much retained with sales orders? Yes. Does someone independent of the warehouse check goods leaving the premises with the related GDNs? Yes. Do customers sign for all goods accepted? Yes. Are any queries agreed with the driver and recorded on the GDN? No. Do both parties sign the amendments to the GDN? Yes. Are signed GDN's orders checked back in by the warehouse and any charges approved? Yes. Does the warehouse manager check the sequence of GDNs to ensure all returned by the driver? Yes. Are all GDNs passed to the sales ledger department? Yes. Are all invoices raised based on the GDN set? Yes. Is a copy of the GDN reference to the sales invoice number and filed in numerical order? No. Does the accounts manager check the sequence of processed GDNs each month? Yes. Does the accounts manager check invoices for accuracy and validity based on approved sales order, GDN, and price list? Yes.
The next internal control questionnaire is, are all invoices raised recorded in the sales ledger? As you can see, all 9 questions except for the third question had a check on the yes column, which means that all of these were executed by the company. As for the third question that got the no, it is not stated that the accounts manager checked the sequence of invoices recorded in the sales daybook.
In the fifth questionnaire, it seeks answers to, can items in the sales ledger only be cleared by valid payment, credit note, or journal entry? As you can see on the table, all questions has mark under the yes column. It indicates that all controls are present in the sales system.
So in this portion is all about identifying and evaluating all about cash. If cash received correctly identified, recorded, posted, and promptly banked, it is only answerable by yes or no. So first, is all cash received in the post recorded immediately into a cash diary to which it is cross-referenced? Yes. Do at least 2 people open the post? Yes. Is all cash received then passed immediately to the cashier intact? Yes. Is the cash receipts book written up by the cashier before lunch each day? No. Is cash banked daily? Yes. Is cash banked intact? Yes. Is the time and route of the daily banking varied each day? Yes. Is proper insurance held to cover loss on the premises or in transit? Yes. Is fidelity insurance in place for all staff? Yes. Is all cash retained on site kept in a lock safe? Yes. Does the accounts manager check a sample of the cash diary daily takings to the cash book? Yes. Is the cash book posted to the sales ledger by someone different to the cashier? No. So as you can see, mostly the answer is yes. So I can conclude that cash received are correctly identified, recorded, posted, and promptly banked.
Trade payables. Here's the questionnaires for trade payables. Has a purchase requisition to be raised for all purchases? Yes, because requisition number is recorded from the purchase requisition, it is necessary to serve the customers clearly. Is the purchase requisition pre-numbered? Yes, necessary to trace the purchase request. Has a purchase order to be raised for all purchases? Yes, it is necessary to be recorded in the books by the account manager.
Are purchase orders pre-numbered? Yes. Purchase orders should be pre-numbered to ensure completeness and identify missing orders. Do purchase orders have to be approved? Yes. It is required to approve a purchase order before it is sent to the supplier. Are vendors' monthly statements reconciled to the purchase ledger? Yes. To ensure and identify payments you made or discounts from vendor has not passed, or pricing claims and returns that have not yet been credited.
Do adjustments to accounts payable require the approval of a responsible official? Yes, it is required that adjustments to accounts payable be approved by a responsible official. Are all vendors' invoices checked for proper pricing, extensions, footings, and terms? No, invoices are checked occasionally. Does the company ensure that claims for damaged merchandise are processed promptly? Yes. When there is any problem with the delivery, then the goods are returned with the driver and the purchase ledger clerk is informed.
Are unmatched invoices, receiving reports, and purchase invoices reviewed periodically? Yes, based on the documentation of Mr. Moore, the invoices that were unmatched in the company were sent back to the supplier to reconcile the purchases and other invoices. The importance of reviewing the unmatched invoices will avoid misstatements and so that the recording should be verified. In addition to this, are supporting documents reviewed by check signers prior to payment? Based on the documentation, there were no documents being reviewed by check signers prior to payment. They automatically signed the checks for payment. In connection with this, Risks arise to personal interest benefits and there can be an occurrence of dishonest act.
For the second to the last question, are supporting documents stamped cancelled by the check signers? It is answered by a no, as check is passed to the check signers together with the supporting documents. Lastly, are checks mailed directly by the person signing the check and not returned to the preparers? The answer again is no, because it is returned to the preparers to write in the cash book and post the check to the supplier. And that is all for the checklist for trade payables.
To the final visit, the following substantive tests were carried out in the trade receivables, showing the statement of financial position of Sheridan AV Ltd. There are audit assertions that is needed to be tested in order to carry out some details. We have presentation and disclosures, accuracy, classification and valuation, rights and obligation, completeness, and cut-off. For presentation and disclosures, tests to be carried out is to perform analytical procedures calculating the ratios of receivable turnover of Sheridan AV Ltd. For the year 2020, their accounts receivable turnover ratio is 7.21%. At the year 2021, they have increased. Their receivable turnover ratio is 9.15%. That indicates that Sheridan AV Ltd collections of account receivable is efficient and that the company has a high proportion of quality customers that pay their debts quickly. It also indicates that the company operates on a cash basis. In checking opening balances to previous year's accounts, it is properly forwarded in the opening balances. In obtaining the age list of balances and checking a sample to underlying records, basing on the documentation, the aging report as of March 31, 2021 were correctly obtained from the sales invoices, both retail and wholesales, and testing the list adds up, agreeing the list to the control account and to the financial statements. Based on the control account, it was properly identified and recorded. However, accounts receivable in aging report as at 31st March 2021, the amount is 837,486, but it was only recorded at 737,486. In comparing statement presentation with applicable accounting standards, based on the disclosure note in determining the trade receivable, it does not discloses the amount of bad debts that should be seen in the disclosure notes. Is there an allowance for bad debts showing in the financial statement? There is no allowance for bad debts in the given financial statements. In determining the appropriateness of any disclosures relating to trade receivables, we have trade receivables amounting to 837,486, a bad debts allowance of 100,000, other debtors, prepayments of 50,940 that is equal to 788,426 trade receivable as of March 2021. For accuracy, classification, and valuation, we need to vouch a sample of a trade receivable to support documentation as follows. So in the first vouch sample, based on the list and invoices, goods dispatch notes, and sales invoices or other supporting documents were not properly calculated. Wrong operations are used to get the total VAT. Moreover, there was recorded incorrect sales invoice number in the sales of retail. Second, in obtaining the list that breaks down the bad debt provision by debtor, the bad debts were recorded correctly at the expense of 100,000, reconciling with the financial statement. However, there were no provided breakdowns. There were only figures without disclosures provided, which is a high risk of manipulation and fraud. In obtaining the list of debts with balances over 3 months olds in excess of their credit limit and enhance of liquidators of receivers, there is only one document provided with balances over 90 days old. So we cannot obtain the other information needed. In comparing the list under 1 and 2, based on the documentation provided, it was not enough to support the figures and how they were calculated, referring on the data given. Bad and doubtful debts are also not properly broken down and separated, which leaves a lot of holes of information to the receivables and prepayments. For completeness and cut-off, it needs to perform cut-off test for sales and sales returns. Based on the sample recorded of sales transactions, there were some sales invoices that were not recorded in the proper period. It generates also a difficulty in determining the sales. So for the last, existence or occurrence, we have a table provided. So there were 5 companies that were sent for clarification. So it has Tempo Head Ltd, Deving DIY Wholesaler Ltd, Enershine Wholesaler Ltd, Zen AV Wholesaler, Bristol Audio Ltd, confirming the accounts and their balances of Sheridan AV. So as of April 10, 2021, they were sent by a letter confirming their balances. So out of 5 company, Bristol Audio Ltd needs to have a follow-up. It is because out of 5 company, Bristol Audio Ltd has no reply been received by the auditor. So, in procedure in carrying out the trade receivable circulation, it is not carried out of unsatisfactory results that have been obtained. So, the remaining balance of 40,000 of Bristol Audio Ltd is in the list of bad debts provision of the company. The remaining balance is an uncollectible account. However, there were no provided credits notes for Bristol Audio based on the provided credits notes of the company.
Current asset. The client is the Sheridan AV. Year-end December 2021. Non-current assets are assets that are held for longer than 1 year for use in the entity's operations. Substantive tests should be carried out at the year-end on the statement of financial position to gain evidence regarding the following assertions: presentation and disclosure, accuracy, classification and valuation, rights and obligations, completeness and cut-off, existence or occurrence. The following substantive tests were carried out on the now non-current assets showing on the statement of financial position. As to presentation and disclosure, the audit objective, non-current assets are properly identified and classified in the financial statements. Disclosures regarding cost or valuations, depreciation methods, and useful lives are adequate. To reach these objectives, tests should be carried out. The following tests are the perform analytical procedures, calculate ratios, analyze ratio results, check opening balances to previous year's accounts to ensure properly brought forward, check figures per the list of non-current assets to the financial statements to ensure assets have been extracted correctly, inquire into assets' useful lives or residual values to ensure depreciation is appropriate. Here is the details of testing. The opening balances of the accounts are recorded properly, but the cost that was brought forward is not. The data presented is not complete and the date printed was not stated. The control number in the sheets are missing. The calculation of depreciation needs to be presented. The methods that they are using must be shown in the notes of the correct valuation of accounts must be detailed and measured reliably. As to the accuracy, classification, and valuation, and rights and obligations, audit objectives are non-current assets are stated at cost or valuation less accumulated depreciation. The entity owns or has rights to the non-current assets at statement of financial position date. These are the tests. Check a sample of additions to freehold land and buildings to completion statements to verify amount paid or date of acquisition. Check a sample of additions to plant and equipment to invoices to verify costs, nature, classification of the item, and date of acquisition. Perform calculation of profit or loss on disposal and agree sales proceeds to cash records to ensure calculated correctly. Sample check disposals to documents supporting disposal or VAT invoices, agreements, correspondence, meetings, etc. for authorizations. Perform depreciation calculations to ensure correctly calculated and in accordance with company policy. The test of details. To verify the amount paid or date of acquisition of the land and buildings, samples are taken and based on the sample, the land and buildings has a correct valuation of accounts. Based on the item and date of acquisition, the item has recorded properly. The profit or loss on disposal agree to sales proceeds and cash records. This means that profit or loss valuation is recorded properly. The disposals and VAT invoices corresponds to the minutes of the authorizations. This means that internal control is properly implemented. In the recalculation of depreciation, it is correctly presented and it's in accordance with the company policy. As to completeness and cut-off, the objective is non-current asset balances include all applicable assets used in operations at the statement of financial position date. So, the current assets balances needs to be in the financial position, the operations date. The following tests are: check nature of the items capitalized to ensure only items of a capital nature included in non-current asset by reviewing repairs and maintenance account. Trace a sample of non-current assets to list all of non-current assets to ensure all assets included. Review minutes for evidence of disposal to ensure that authorized disposals have been recorded. Test of details. Based on the investigation in the repairs and maintenance account, it is composed of all non-current assets. On the overview of the minutes for evidence of disposal, it's ensured that the authorized disposal have been recorded accurately. As to existence or occurrence, the objective is to recorded non-current assets represent productive assets that are in use of the statement of financial position date. Physical existence of assets to ensure existence and working conditions, states of completion in respect to assets in course of construction. The details of testing is: the non-current assets that is not part of repairs and maintenance are still useful and in good condition. From the audit work carried out, I can confirm that non-current assets are properly evaluated, subject to corrections and accurate data presentations. In my opinion, non-current assets are fairly stated. From the audit work carried out, I confirm that non-current assets are properly evaluated, subject to corrections and accurate data presentation. In my opinion, non-current assets are fairly stated. Signed, Andrea Adanza, Jebel Aji Baje, Hanime A. Boaquina, Mary Joy M. Calagui, and Debbie Jane L. Escopete, the auditors. Trade payables of Sheridan Audiovisuals. Trade payables are the amounts the company owes its suppliers for the provision of goods and services. Trade payables are shown as current liabilities. Substantive testing should be carried out at year-end on the statement of financial position to gain evidence regarding the following assertions: presentation and disclosure, accuracy, classification and evaluation, rights and obligations, completeness and cutoff, existence or occurrence. As to the audit objective of presentation and disclosure, trade payables are properly identified and classified in the financial statements. Disclosures relating to the trade payables are adequate. To achieve these objectives, the test must be carried out. Here is the details of testing. The opening balances to previous years is correct except for the cost that was brought forward by the entity. As of March 31, the aging balance of trade payables is 478,056. It is equal to the purchases control account and the general ledger with purchase discounts. However, trade payables are not properly classified in the financial statement. Current liability is presented in the balance sheet. It is necessary to classify them and put them to the notes of the financial statement. It will result to the full disclosure of current and non-current liabilities relating to trade payables. As to the accuracy, classification, and valuation, based on the reviewed sample in the trade payables, the accounts are on its correct amount and listed with no errors. Invoices to suppliers, goods received, notes and purchase orders are recorded at correct amount. As to completeness and cutoff, the management conducted a bookkeeping of accounts to properly record the events that happened in the entity. Invoices and vouchers are pre-numbered so that classification of accounts and inventories will be updated immediately. Trade payables account was recorded in the right amount and reconciled in the invoices and in purchase control ledgers. The period of the payables are calculated correctly. The last goods received note issued on the last business day of the audit period matched with the related purchase documents. Transactions were recorded in the proper period and correct valuation. There is no late payment charges and the aging accounts coincides with the balances of the controlled purchases. As to the existence or occurrence, the amount of accounts match with the books of the clients. It is provided at the performing of the payables of circulation. Here is the letter for the account circulation. Sheridan Audiovisuals Limited, United Kingdom. Dear Mr. Sheridan, as part of their normal audit procedures, we have been requested by our auditors, Montefalco and Corporation, to ask you to confirm the balance on your account with us at December 31, 2021, our year end. The balance in your account is presented below in our records. After examining the balance with your records, please do sign the letter of confirmation and put it in the prepaid enclosed envelope and give it back to the auditor. If the balance doesn't match with your records, please state the differences in the space provided. Please note that this request is made for audit purposes only and has no further significance. Your kind cooperation with this matter will be greatly appreciated. Further, Mr. Sheridan confirmed that the balance below is accurate and correctly classified.
Audit Program Inventory. As you can see, the first page of the audit program for inventory is closely similar to the previous accounts. The only constant changes that it contains is the notes below, which of course need to be aligned on what is actually to be presented. The first table shows the audit assertions, presentations and disclosure, accuracy, classification and valuation, rights and obligations, completeness and cutoff, and lastly, existence and occurrence. The table also included the audit objective of each assertions and tasks to be carried out. The details of testing includes the procedures and analysis. Tracing of opening inventory records, inventory turnover, gross margins, and proper procedures of inventory counting were asked in this part. As for Sheridan Audiovisual, being all things considered, they were doing good on their business as being reflected in their inventory turnover and results during the audit. The second part is the inventory count attendance. In this section, it showcases the attendees on the inventory counting, date of count, locations being counted, types of inventory, their values, details and procedures of the counting, checking of the inventory being counted, notes if there were damaged or slow-moving inventory, accuracy of the counting, whether the items were being double counted or not, if there will be deliveries during the date of counting, the inventory sheets if being processed correctly. All of them mentioned were almost done correctly by the team. There were still lapses such as recording the details of the last goods dispatch number, but can be improved over time. In conclusion, the inventory count went smoothly, and there were no problems encountered from the sample test counts. The employees also know their job well and were able to answer all the questions being asked.
Payroll involves a lot of sensitive and personal employee information. It is important for employers to keep that information safe. You also need to prevent payroll fraud. You need to limit who has access to payroll information and who can make changes to your business payroll. May I present to you the expected payroll controls and its existence in the management. First, all changes to the payroll are authorized as to starters, leavers, rate of pay changes, and rate of tax changes. There is an existence of authorized changes with the starters and leavers. The payroll administrator, whose duty is to input new employees and remove an employee who leaves or retires from the payroll system, enter the starter into the payroll system and remove the leaver onto the system. When rate of pay or tax changes, it was recorded in the minutes. The minutes indicate that the pay raise has been authorized by the board. Change tracking. Copies of the minutes of rate changes to the payroll were given to the account manager to be kept. Error checking reports. The account manager has run and reviewed the reports before she signed it as authorized. Access restricted to payroll records. The payroll records and employee files are locked up to prevent unauthorized access. The use of strong password in protection of the records stored online is important to prevent unauthorized changes to records such as a pay rate. The separation of duties. The account manager authorizes changes made to the payroll and checks the monthly payroll run. The payroll administrator processes the weekly pay run for staff in production and warehouse and the monthly payroll run for all other staff, while the finance director authorizes the payment. In recording the employee's time of work in a day, reprinted form of timesheets were provided indicating the name, date, and time he started and finished work, which the employee will just fill in the details by writing it down. At the end of the week, the employee himself will calculate the total hours and minutes worked for the week and write its total on the given form using manual calculations. Calculation verification. The line manager has verified the manual calculation of total hours of work for his subordinate, signed the document to authorize it as accurate, and sent it to payroll administrator for processing. Overtime payment is agreed with the finance director, who authorizes the payment. The payrolls for bank transfers to employees were authorized by the account manager and finance director. And by doing the payroll checking account prevents someone from fraudulently increasing the amount on an existing paycheck or creating an entirely new one, since the funds in the account will not be sufficient to pay for the altered check.
The audit program of cash. As you can see, there is a name of client, which is Sheridan AV, year-end December 21, and the name of the auditors. Cash relates to the monetary assets held by a company. Substantive testing should be carried out at year-end on the statement of financial position to gain evidence regarding the following assertions. presentation and disclosure, accuracy, classification and valuation, rights and obligations, completeness and cutoff, and existence or occurrence. The following substantive tests were carried out in the cash showing in the statement of financial position. So first, in the presentation and disclosure, the audit objective is monetary assets are properly identified and classified in the financial statements. In tests to be carried out, perform analytical procedures, calculate ratios, analyze ratio results. Details of the testing, the auditors calculate the ratios and redo the bank reconciliation. Check opening balances to previous year's accounts to ensure properly brought forward. The details of testing, the previous year's accounts was not shown. Check figures per the cash book to the financial statements to ensure amounts have been extracted correctly. The balance per cash book has been reviewed and checked by the auditor and is extracted correctly. Compare statement presentation with applicable accounting standards to determine that monetary assets are properly identified and classified in financial statements. So the details of testing, it has been compared to the applicable accounting standard and was able to determine the lapses. Inaccuracy, classification, and valuation, the objective is monetary assets are recorded at the correct balance at the statement of financial position. Test to be carried out. Request a bank confirmation letter from the banks of which the clients hold accounts obtaining authorization from the client were not already held. The bank gave the confirmation letter to the auditors of which the client holds the account. Reperform the period and bank reconciliation checking it has been prepared correctly. It is reperformed and found out that it has not been prepared correct as the amount stated in the bank was 249,505.3 while the correct balance per book was 254,321. Rights and obligation. The objective is that the entity owns or has rights to the monetary assets at statement of financial position date. Test to be carried out. Check that the bank confirmation letter states that the monetary amount held by the client to confirm ownership. The details of testing, the bank confirmation response give the monetary amount of the client together with its account number and sort code to confirm ownership. In completeness and cutoff, the objective is the cash balance per the statement of financial position date includes all monetary assets owned. In test to be carried out, check that the bank confirmation letter does not list any additional accounts that have not been recorded by the client. And the details of testing, there are no additional accounts listed in the confirmation letter given by the bank. Lastly, in existence or occurrence, the objective is the monetary assets recorded in the statement of financial position exist. Check that the bank letter confirms the correct balance in the accounts. The details of testing, the bank did not confirm the correct balance as the balance per cash book amount is 254,321 while the amount stated in the bank was only 249,505.3. Confirm the existence of any material reconciling items within the bank reconciliation. Example, count cash if a large amount is held outside of a bank. The details of testing, there is a cash held in safe deposited and checks held in safe to be deposited. From the audit work carried out, I confirm that cash is properly valuated, subject to corrections and accurate data presentation. In my opinion, cash is fairly stated.